particularly SIPs which have started after 2023 or so. The outlook for those SIPs look pretty bad. I've seen 1992, 94, 99, 2007, 2017, etc. I believe that very few are going to be 20-year SIPs. Is this a time to take out money from small and mid cap? We think it is a clear time to take out lock, stock and barrel from small and mid cap.
Should you really consider stopping your SIPs? Well, right now the market is falling from 26,000 to 22,000 levels. So should you increase your SIP investment or you should completely stop it for now? Let's analyze this in today's video. So first we need to understand this fact: who should do a SIP in the stock market? Well, people who have other primary source of incomes and don't actively invest or trade in the market should do SIPs, because they don't have enough time to actively put in efforts in their stock market investments. But if you look at this data, we can clearly see since April 2023, there has been a crazy amount of inflow in SIPs from the retail investors. Why? Because everyone lately has been thinking that stock market is giving crazy returns and everyone should park their money in stock market because it never gives losses in the long term. Well, it does give a return in long term, but there are also incidents where there is no return for a long time.
So if you had done a SIP investment between 1995 and 2002 for 7 years in India, the return would have been zero. If you had done a SIP investment in mid cap between 1995 and 2002, the return would be big negative. Investment between 1994 and 2002, it would have been even more negative. In mid cap between 2006 and 2013, the return would have been negative.
See, for better understanding, if you look at this graph, in 1 year's time, the SIP's return in Nifty 50 since 1999, the maximum return has been 59%. And what has been the lowest? A negative of 39%. But if you look at the returns in the time period of 3 to 5 years, we can see the highest returns is 39% and the lowest returns is -8% and 5%. But this is where things start to turn. From 10-year onwards, the maximum return is 21% and the lowest return is 8%. The maximum return on 15 and 20-year time period is 15% and the lowest is 9 and 13%. Systematic investment plannings do require a stubborn long-term mindset. If you're looking at your portfolio in 1 to 3 year time period and you're worried about your investments as they are not showing any return or are showing a loss, then systematic investment planning is not for you.
If you're going to do a 20-year SIP from 2025 to 2045, will it be low? Answer is no.
So the question is, where is Nifty heading right now? See, the market is in a bearish trend. It has tested the resistance 3 times already, and that's why the market rose 3.4% in the first half of March. But if we consider the fact of yield curve, which is positive now, which is the only technical indicator for every recession, and if we include the factor of interest rate cuts and low inflation together, there is a very big chance of recession in the future. With FIIs taking a lot of cash from the Indian market, as explained in our previous video, the DIIs are the only hope to actually stabilize their selling off. And how do these DIIs get their money from? They get this money from your SIPs. But if you look at the SIP inflow data for last 2 months, we can clearly see that there has been a dip in the inflows, a 1.5% decline in February itself. And even if you look at the Buffett indicator, it also suggests that the Indian markets are overvalued. And even a lot of economics are stating that the Indian market is the most overvalued market in the world right now. So what should you do? Stop your SIPs or increase your SIPs? See, according to our analysis, if you feel like there is more decline left in the market and there can be better prices at which the market might be available in 3 months or in a year's time, you can think of stopping your SIPs as of now and restart your SIPs when these markets will be at their lowest. See, it's definitely very hard to time the market and we're not suggesting you to do that as well. But every economic indicator and every chart pattern as well is actually suggesting that there might be a very big downfall in the stock market. What will you do? Stop your SIPs or increase them? Let us know in the comments down below, and don't forget to have a good day. Thank you so much.